It's Thursday, September 24th, and I'm here again with Jerry Randall, Chief Executive of AIM-listed Venture Life Group, Epicode VLG, a company that develops, manufactures and distributes products for the consumer self-care market. Jerry, good to speak with you again.
Hello, Alan. Good to speak with you again.
So you announced a very strong set of numbers and trading this morning. We'll obviously discuss that in a second, but before we get into it, can you give listeners a brief overview of the Venture Life offering?
Venture Life is an international consumer self-care business. So we develop, manufacture, and then commercialize products for the self-care market. You'll buy those products as a consumer in the pharmacies or in the grocery multiples. They cover a number of therapy areas such as oral care, skin care, pain relief. We sell directly in the UK and the Netherlands to those key retailers, and then internationally in over 40 other countries we sell through distribution partners. We have manufacturing and development facility based in Italy, just near Milan, and then commercial operations in the Netherlands and in the UK, where our head office is also.
Okay, thank you for that. I'm going to bring up an overlay now that shows the key financial highlights from today's results. Can you take us through, please, Jerry?
Yes, of course. We've had a fantastic first half of the year, which, against the backdrop, obviously, of COVID and the pandemic and all the difficulties that are there, is a big difference to, I suppose, what most people have experienced. We've had an element of increase through COVID, so we've developed a hand sanitizer gel that we started selling in Q2, but a significant part of the growth we've had has come through from the rest of our business. Organic growth from existing partners, new partners, increasing distribution, and the acquisition of PharmaSource that we acquired in January. So overall revenues up 80%. As I say, 65 of that 80% was organic. In particular, we've noted that the revenues from our own brands that we own is up to 53% of the overall revenues in that half, compared with 30% last year. So significant growth in those higher margin, higher value products. Gross profits increased, in fact, almost doubled to just under 7 million, and a fivefold increase in EBITDA compared to the previous period to 3.5 million, commensurate increase in profit before tax and earnings per share. We also finished the period with a good, strong cash balance. So despite paying out 6.5 million euros for an acquisition and investing in inventory, we've still generated cash through the period.
That's a very strong cash position indeed. Okay, I'm now going to break up an overlay that shows the key commercial highlights from today's results. You've touched on some of those when you looked at the numbers. Can you take us through this, please, Jerry?
Sure. I think what I must start with, of course, is the fact that we kept our business operating through the whole pandemic period. And if you recognise that 100 of our 120 or so employees are based in Lombardy, northern Italy, at the development and manufacturing site, we were able to keep that open and running at a time when 90% of businesses in Italy were shut down. So, real testament to the staff and their operations there, and no incidents of COVID within the factory. We put a lot of safety procedures in place, so that really helped us to keep going. We signed a new 15-year agreement with our Chinese partner who sell our oral care products, and in fact they placed significant levels of orders with us this year before the COVID virus hit, so they were not again driven by COVID, but we've already delivered 2.3 million of revenue to that partner in the first half, and there'll be more to follow. Interestingly, in the UK as well, again, even through the lockdown period, our Ultradex Fresh Breath halitosis mouthwash product has now become the market leader in the medicated fresh breath category, overtaking the others during that time. We signed more distribution agreements. That's where we license our products internationally on an exclusive basis. And also we develop and manufacture new products for customers under their own brands too, and 11 new agreements for that. So really pleased with that growth. The PharmaSource acquisition that we made in the Netherlands in January is on track and growing very well. And we're starting also to commercialize a number of the products we acquired there with new partners. One of our larger partners, Alliance Pharma in the UK, that some of you shareholders, investors will know, we've now been appointed as a second manufacturer for their key Kelo-Cote brand. And, they announced some results earlier this week and showing Kelo-Cote in strong growth. So we'll do quite significant revenues in this second half of the year with them. As I mentioned before, we generated this new hand sanitizing gel product from a standing start in 11 days in Q2 to service the increasing demand. And we've now generated a range of products in the area of antibacterial and hand sanitizer called Disin Plus, which we're selling in a number of countries. And in fact, we sold over 1 million units of that to Asda in the Q2 of 2020.
Superb. Okay, so I'm now going to bring up a slide that shows the key developments since the end of June, and this includes a clinical trial with COVID-19 patients in partnership with Cardiff University. Can you just bring us up to date on these developments and then tell us about the Cardiff University trial?
Yeah, sure. We have obviously a number of products and brands in the range, and we're always looking to expand the coverage of those in terms of retailers in the UK and the Netherlands, but also partners internationally. And we're delighted to say that Boots will be launching Dentyl, our biphase mouthwash product that we acquired in 2018. They're going to be launching that in the second half of 2020. It's been out of Boots for over 4 years now. The previous owner didn't take care of the brand, but that's a really good win for us. Boots have had a difficult time, as many pharmacies, but to get into Boots as a brand new listing for Dentyl is really good. We've also developed new versions of that for younger customers, so Unicorn and Mermaid, which are targeted at younger people where plaque is a really big issue. They'll launch in the UK, and even we've developed a toothpaste to go alongside the core products of Dentyl, which will launch UK and internationally. We've done a deal with Lloyd's Pharmacy to launch some of the newly acquired PharmaSource products, which is in the area of fungal nail infections. And also in the Netherlands, we've extended our reach there with those new retailers again with new products. So continue to do more expansion of our listings, of our partners. And as Alan mentioned there, the clinical trial with Cardiff University, that came about because Cardiff, the dental school in the university, did some research to look at how they can help dentists beginning to treat patients coming back after COVID, and they wanted to know what mouthwash the patients could have to make sure the dentist would be safe. And they identified a component called CPC, which is an antibacterial, as being particularly effective in vitro work. And dental mouthwash has CPC as its main active ingredient. So we got in touch with Cardiff. We're now financially supporting that study. Dentyl is a part of that study. And the aim really is to demonstrate that the viral load in the mouth can be reduced by the use of these mouthwashes, which is a real benefit for dentists because it means they can safely treat patients who rinse with this mouthwash before they come into the surgery. But also we hope a wider benefit if we could demonstrate that Dentyl and the CPC within it can help reduce the viral load for the general public. So we're very excited about the study. The results will be published in about 6 months' time, and as I say, we feel very positive about the benefits that could bring, particularly in the current environment.
That's excellent progress, and clearly Dentyl is a rising star there, Jerry. Can you tell me or tell us how the rest of the year is shaping up for you?
Sure. I mean, we've continued into the second half of the year with a strong order book. We've had during the first half of the year, we've had some customers who've delayed some of their orders or moved things around. That's been balanced off with the sort of peak sales we had on the hand sanitizer gel. But as you move into the second half, we see business in good shape. Our hand gel sales continue to progress. They won't be as big in the second half as they were in the first half because that real sort of peak in Q2 was quite significant. But we also had some costs in the first half which balanced that. So, we see continued good trading in the second half. We see continued sales to our customers, good order book. As I say, the initiation of production of the Kellicote product, which will be significant for us. And we've also done quite a lot of new business in the second half that will impact in 2021. So we're positive about the second half. We're very comfortable about the numbers that are out in the market for us at the moment, and also very positive about next year, 2021. And that's against this backdrop of COVID and the continuing concerns in the growth. But we have a robust business model. We're selling in a number of geographies, a number of products, a number of customers, and we have upsides in our business which counteract some of those negatives from COVID.
Well, that's excellent news, Jerry. It's been great talking with you once again. Before we wrap up here, can you just provide some key takeaway points for investors watching this?
Yes, I think most importantly, I'd say the last 6 months of 9 months have shown how resilient our business is, not just in the products we have and the areas where we sell, but in a multi-channel approach to both our sales and marketing, to a quick, adaptable workforce who are able to deal with the demands and pressures of that pandemic. And we've shown that our growth in revenues, that particularly strong growth, is not just a bounce from COVID, but is actually strong underlying growth within our business. And we think the COVID effect is relatively small. We're cash generative. We've generated cash in the first half. We'll continue to generate cash in the second half. We'll finish the second half of the year in a good net cash position, and that sets us up well for making further acquisitions. And we continue to review some good bolt-on acquisitions. And I think the current environment brings good opportunities for that. So we'd expect, using our current resources, not requiring an equity raise, to be able to complete some of those, and that will add more cash generation and profitability to the bottom line. So that operating leverage that we have in the business, we've got significant capacity now. We're investing heavily in the plant this year. We'll have over 40% capacity still at the end of the year. So those acquisitions that we hope to make will come into the plant, generate more profitability and revenues, and those levels of profit will accelerate faster than our revenue growth.
Superb. So it looks as though you've got a very busy 6 months lined up. Once again, Jerry Randall, Chief Executive of Venture Life Group, many thanks for joining us today.
My pleasure. Thank you, Alan.